Looks like, indeed, investors are taking this in stride. Should they be?
Angie, good morning. Look, I think we also got to take into account last week's market volatility, which is starting to some extent bake in and account for a potential no vote, as it would appear the polls late last week was clearly indicating that might be the way it went, and that clearly it is. I guess to some extent also, we're thinking more and more that we're in a very different situation to 2010-12 if this had occurrence what was happening then. So again, when you've got the ECB with a quantitative easing program putting in place, the potential of contagion really is just not considered an issue. Our strategists and analysts have calculated, Angie, that the total foreign bank exposure to Greece within Europe is about 45 billion euros. Now, that's a big number. Obviously, we can't ignore that. But when you compare it to the total market cap of European banks of 1.3 trillion euros, it puts it in perspective to some extent. But clearly the most important thing is to get emergency funding back into Greece as soon as possible, to make sure that emergency services and healthcare and all those sorts of important issues are supplied to the Greek people.
Yeah, but the thing is, they want collateral for that money, at least from the ECB side. But what do you think of the bank holiday that extends into Wednesday? At some point, it's got to be lifted. If there is still no deal, it sounds like Greece is trying to buy some time. But if there's no deal, they're going to have to start issuing IOUs, scripts, maybe printing money. And then we're going to take a look at a possibility of a Graccident, I guess.
Yeah, look, I mean, all of those issues that you just mentioned are definitely on the table. And clearly, there's not going to be one single solution. We've got a number of hurdles to take place, a number of timelines right in front of us. So I don't think this is clearly over, but markets are taking it a little bit more in their stride. I think if there was the prospect of a Greek exit of the EU and the monetary union, that we might see some additional volatility. But from what we know now, we're going to see how negotiations continue. Quite clearly that we need to see cash returning to Greek banks post-Wednesday to allow the Greek population with basically getting on with their lives. But to some extent, clearly the big picture is what does the Greek government now agree to with regards to the creditors? I doubt the creditors are going to give an enormous amount of room. They may be prepared to compromise on some issues in a modest way, but that's going to be waiting to see and remain what the negotiators decide to do.
Okay, and how do you think the RBA is taking in these global gyrations, not only here in Asia, but also Europe?
Yeah, look, they're going to be, obviously, every central bank will be watching this very, very closely. Certainly there's been commentary in regards to, in the past, that they're monitoring the situation. But Australia has very, very little direct exposure to the Greek situation, obviously. But it is more important that we've seen the Australian share market obviously caught up in this volatility, particularly late last week. Probably more importantly, the focus on the Reserve Bank is their meeting today, Angie, which is their monthly board meeting, and they'll decide on interest rate settings. Now, we're of the view that they will not cut rates today. We are of the view that we will see further rate cuts later this year. We've had two this year with cash rates now at 2%. And it's typical of the Reserve Bank at this stage now to be basically pausing and assessing the impact of those cuts to see how the Australian economy is continuing to transition away from the mining investment boom. It's just worth noting that, the latest GDP read was 2.3%. That's still well below our long-term trend growth rate of 3.25%. What is helping the Reserve Bank at the moment in this volatility is the fact that the Aussie dollar has now broken 75 US cents, which is helping. Not helping, obviously, is the weakness in the euro. So our other trading currencies in that basket really probably not seeing a big enough depreciation on the Aussie against its other trading partners. But it's definitely helping a little.
And definitely the transition away from reliance on the mining boom in China, perhaps offsetting the big rout that we're seeing. But still, how are investors in Australia reading through just what's happening in China and that sell-off we're seeing?
Yeah, well, certainly with great caution, and we've seen clearly the resource space, which is about 15% of our market in total, really continues to underperform, really as much as concern on where metal prices are going. And as you know, the iron ore price rallied pretty hard from its lows of $45 a tonne towards $60 a tonne, and that's coming back towards $55 now. The oil price, as we know, has fallen over the last couple of nights, so that certainly impacts investor sentiment in regards to the commodity space for Australia. But I think on the whole, Australians are reasonably positive or certainly okay with what's happening in China in terms of we don't gauge as a huge economic impact by the share market fall. Our main concerns here at Macquarie is more around the Chinese government's financial reform program and whether, in fact, the intervention of the last couple of days is going to sort of delay that ongoing program.